Time-driven activity-based costing is a variation on traditional ABC. It is simplified and therefore less costly, but that means it is also a less accurate form of activity-based costing. For TDABC, there are two key input calculations needed. These are 1, cost per time unit of capacity, and 2, the unit times of a particular activity. The key difference between ABC and TDABC is that the array of cost drivers used in ABC are replaced by a single cost driver, time, in TDABC. This has the effect of greatly simplifying the costing exercise. So, having done ABC already, in some ways moving on to TDABC is quite simple. However, we also need to think about theoretical, practical and actual capacity based on time. To do this, we need to work out the cost per time unit of capacity, and we start this by looking at the theoretical capacity. Theoretical capacity is based on the total number of staff, the hours and minutes worked per day, and the number of working days in a year. This gives us the total amount of time that is available as a resource in the ideal situation. For example, our company's sales administration team consists of 6 full-time employees working 20 8-hour days per month. This gives us a theoretical capacity of 6 employees times 20 times 8 times 60 equals 57,600 minutes. However, we cannot expect that employees spend every minute on productive work. Usually, only about 80% of the theoretical time is spent on productive work. Therefore, we need to estimate the time spent on non-productive activities and deduct this from the theoretical capacity. Theoretical capacity less non-productive time gives us practical capacity, and practical capacity is the time available for productive work. If we've been informed that approximately 1.5 hours per day per employee is spent on non-productive activities, then we can work this out to be 20 days times 1.5 hours times 60 minutes by 6 employees equals 10,800 minutes. Subtracting this from our theoretical capacity gives us a practical capacity of 46,800 minutes. Once we have practical capacity, we can use this to determine the cost per time unit. So say we want to know the costs for sales processing work undertaken by the sales administration team to help us determine whether a new IT system might be worthwhile purchasing in order to reduce our overall processing costs. If the total costs for this business unit are $35,100 per month, then dividing this by the practical capacity of 46,800 minutes gives us a cost per minute of 75 cents. Now that we have our cost per minute of capacity, we apply this to the activities undertaken by the sales administration team to determine what they are costing us. So if we are looking at order processing costs and we know that it takes 3 minutes to process each new order, 5 minutes to process delivery, and 2 minutes to invoice, then we add this together to get a total of 10 minutes per order. Multiplying by the cost per minute of 75 cents gives us a total cost of $7.50 per order. In addition, we can also total the actual time spent on these activities to identify unused capacity and what the cost of that unused capacity is for the business. That is, if we know that the sales administration team processes 4,200 orders, each taking 10 minutes, then the total actual time spent processing orders for the month is 42,000 minutes. By subtracting this 42,000 from the practical capacity of 46,800, we can see we have excess capacity of 4,800 minutes. This warrants further investigation. It may be a result of the peaks and troughs in sales throughout the year. There may be less sales than normal, or the company may have additional staff as it is expecting to expand in the not too distant future. We can also use time-driven ABC to help with allocating costs to products with a great deal of time-related complexity and variation. That is, we can allocate time based on additional complexity in processes or to show variation in the work undertaken for specific projects, customers or suppliers. The key points to remember with time-driven activity-based costings are: It is a less complex and therefore cheaper way to allocate costs than traditional ABC. It is useful for identifying unused time-related capacity and its costs, and doesn't allocate these costs to the actual products produced. And it enables analysis of costs relating to variation and complexity in products or services.